these on. Okay, can you hear me all? These working? Okay, brilliant. Thanks for joining us. My name's Sam Collins, co-founder at Outrun. Today I'm joined by James, Jan, and Reece. Thank you so much for having us. So we've already had the quick introductions of who they are, but maybe a little bit about their companies, although I feel like sometimes these companies don't need an introduction. So as you probably know, Coinbase is one of the world's leading platforms for trading, infrastructure, digital assets, for both institutional, corporates, also retail. And you're operating across many, many jurisdictions. And we'll talk about maybe one more today. Spoiler alert, it's where we are. Ripple, obviously, you're an infrastructure provider. You're leading all your efforts around digital assets. You're powering the digital asset payments, custody, infrastructure, stablecoin adoption, and financial institutions worldwide again. And this is another very interesting market for you and something we're excited to be talking about. Amina EU, a regulated EU crypto bank and financial services provider, bridging traditional finance and digital assets for institutional professional clients across Europe. So very excited to have you all here. And together we're going to look at this panel on how we can offer a unique perspective on how banks, payments firms, fintechs, other institutions are looking to adopt stablecoins and digital assets and how the industry is moving between experimentation, moving away from pilots and launching real products that are sustainable. So perhaps one of my opening questions to you, Jan, is this is a fast-paced industry. I think we've all been in it a little while, and we've seen how this industry has changed over the years. But perhaps you can give us a little bit of insight on what do you think's changed the most over the last 12 months? What kind of changes are you seeing, and what's making institutional crypto adoption more realistic?
Okay, so I think over the last 12 months, what you can see if you engage with financial institutions is that the conversation has shifted from sort of more an educational, exploitational mindset to really implementing stuff. I remember coming back from Cybers in Frankfurt last year in September, and I've been within institutional sales for the last 6 years. So I've been quite often to Frankfurt and other places. And for the first time, it felt, coming back from Frankfurt home, that this was really conversations we had about implementing things, about real integration work doing. And the people I talked with from financial institutions, they were not doing this undercover like a couple of years ago. It was not a career-limiting move anymore. They were tasked to do that. They were pushed from their stakeholders, from the board, to have these conversations, to go these events and push forward the stuff they were working on.
Interesting. Why do you think that is?
Regulation is definitely one part, because that opened the door. You need regulation, and banks need that regulation and the clarity. That changed. On the other hand, obviously, I think there were already a lot of work done inside these banks, but now regulation really opened the door to implement that and be more outspoken about what they are doing, in contrary to before.
Interesting. Okay. James, from your perspective, obviously in your role, you go all over the world, you speak to clients in all sorts of different jurisdictions, looking at the variety of products that you offer. But from your perspective, in the past 12 months, what's changed in the conversations you're having with them?
Yeah, I think much to Jan's point there, just to add on to that, I think the demand has been there, right? But there's been a restriction from them being allowed to sort of operate for whatever reason, or to offer products, or to be in the market. And I think that restriction has been removed. So I think we've definitely seen that. I think there's been obviously some new products that have been launched that are more aligned to traditional finance in terms of tokenized equities and perpetual futures that are based on commodity type products. And I also feel like as we continue each year, there's more viable institutions in this space that you can actually do business with. We've certainly seen some of the banks coming into this space. We just recently had that announcement from Standard Chartered that they're going to bring Zodia custody into their custody stack, and they already have a custody solution as well. There's other banks out there that's doing that, Turkish banks as well. So we see this sort of becoming more and more of a stable in some of these institutions' product offering, and then that's creating FOMO, right? So there's other institutions that are now going, oh, why aren't we doing something? So I think that's all creating a nice flywheel effect.
It's interesting though, right? Because there is no global regulation. There is no global spanning crypto regulation that we can all adopt. But nevertheless, we've seen some jurisdictions who've applied some sort of regulation or have eased off maybe on sanctions, and that seemed to have a real global effect. I mean, Standard Chartered, they're based in Singapore, right? So
yeah. Well, I think some regions have been like a bit more forward-thinking. Swiss market certainly for sure, right? And so those banks that aren't hampered by global regulations have been able to probably get up to speed a little bit quicker. They've been able to create that muscle memory, that understanding of how the markets work, support 24/7 trading, all these things that just aren't a natural fit to them. So I think that's been really what we've seen the difference every year is that that's becoming more apparent. And now we have the US banks coming in, and other institutions in the States. That's just a big capital flow that's going to come in.
Yeah, no, definitely. And Reece, from your side, I think, Ripple, you've been around, well, for many years now as a company. You're a long-established and well-trusted brand in this space. But have you noticed a shift perhaps in the conversation with your clients and partners away from simple innovation and first mover to market towards real implementation and product launches?
Absolutely. I think, I've been at Ripple 8 years now, so long time in the market. I can tell you my conversations with FIs 5-6 years ago are very different to what they are today, right? You couldn't even really use the word crypto if you were sitting in front of certain people at a bank. And really, we touched a little bit on regulation, we talked about regions. I think what you find is that it's been a bit of an equalizer globally, where certain regions have really kind of stepped in to really enable financial institutions to have and build infrastructure which is going to be beneficial to their markets. So if you mentioned Switzerland, if you look at Turkey, UAE, Africa now, and really what that has meant is that banks are not just operating within an innovation team, but actually these are real solutions that can go on a P&L that they can scale with, and ultimately they have that demand. So if you're a Turkish bank and you do not have a crypto solution, given the demand here, ultimately you're going to lose your customers to the bank and financial institution that does. So yeah, we've really started to see a lot of that move from conversation to implementation. Certainly, probably a bit longer than 12 months, over the last 2 years, I would say.
Okay. You said something there I want to pick up on. You said that you couldn't use the word crypto in front of banks.
Correct.
Is that still the case? Do you have to use other words, or can you say crypto now?
I think we use crypto, digital assets, blockchain. It's all in the same thing, right? But I think there's much more acceptance. The question is no longer if a financial institution will adopt this technology. The question is when, how, and how is it going to scale? And I'm sure we'll come on to different kind of infrastructure plays that we're seeing there.
No, for sure.
Reece makes a good point, though, that what's fundamentally changed is now you're not talking to the digital teams.
Exactly.
You're talking to business owners, and they've got balance sheet and P&L to make and balance sheet to deploy, and that's a fundamental change. And now digital teams are more like center of excellence, and they're used as a reference, but they're not driving some of these initiatives.
Yeah, we're seeing some of those kind of projects where we were dealing with an innovation team, let's say, over the last few years, to now, before they're actually even getting that board approval, it's already handed over to the business units, and they're not looking at how one part is going to implement into a specific section, but they're looking at a phased approach over 2, 3, 4 years across multiple business units to tie it all together, which is a huge difference to what we've seen previously.
And to the point of crypto, the good thing is the negative connotation we had for crypto, like it's all only fraud and money laundering, whatever, that's gone away. But on the other hand, and we were dancing around that by saying it's digital assets, blah, blah, blah. But the term digital assets now has a much, much more broader meaning. And it's not only about the single trick pony, crypto on-ramp to buy Bitcoin. It's about digital assets across the whole infrastructure of a bank, like payments, like trading, etc., for traditional assets being tokenized.
Yeah, you've gone from pure speculation, meme coins, through to, BlackRock, Citi, Franklin Templeton, the big players really leaning into the space. And that adds an extra element of credibility and comfort, I think, if you're a global financial institution looking to enter this space, you want to look at what your competitors are doing.
No, definitely. It's super interesting, right? I think the innovation that we've all been at the forefront of, right, for many years, now coming into implementation with the regulation itself. Is there still an advantage, however, for you guys in the market? Do you see this? And maybe I'll come to you, Jan, on this one. As regulation sort of starts to develop, second mover advantage, first mover advantage, whatever, and it starts to equalize, where's that competitive edge going to be now for you as regulations almost standardizes across certain markets? Although there are markets which don't have regulation yet, despite strong crypto adoption. How do you think that's going to play out?
Well, I think the differentiation is still with the customer, basically. What products the customer see, what trust he brings to the partner he engaged with. And I think that is basically the advantage TradFi and banks have in this space, because they already own the distribution, and they are they have the infrastructure with regard to compliance procedures, with regard to AML processes, etc., to provide that to clients in a compliant, regulated manner. And that's at the end what clients cherish and favor as well. So I think that is where you should look for building the advantage into the market, integrating that into your offering.
So I think just on that point as well, I think service level, right? That's how you differentiate, and I think some of that has been lost in the past, or and not necessarily. I think that's how, with regulation and being in place, I think also the way that you operate with your clients and provide them that assurance and level of service, I think it's going to become even more important.
What about trust? That's always a word we've had in crypto. Maybe Reece, this is something you can come on. What about that trust factor? If regulation is constant, service levels will always vary between banks. We know this, right? But let's say service levels vary here and there. What else becomes a key differentiator? Is it trust? Is it the product stack itself?
I mean, I think it's an accumulation of everything, ultimately. I think a lot of it can also come down to the FIs, the bank's customers, their risk appetite. What products do they want to access? Is the bank going to be able to offer that from day one? Are they going to utilize an alternative infrastructure provider, a fintech, a PSP? Ultimately, you're going to see the big players want to deal with the large institutions, because ultimately they've worked with them from day dot. But in terms of differentiation, I think that ultimately it's going to be that speed to market, to be able to capture and maintain and retain the customer before they look elsewhere and ultimately potentially lose out there.
James, what do you think when it comes to separating institutions, right, that successfully scale? How do they overcome barriers, and what are those barriers from having a permanent pilot out there, right, when you work with an FI or a bank, versus getting it over the line into a real product suite that really is deployed and loved and cherished within the bank as a real product?
Yeah, I think part of that is that movement away from the digital team or the innovation lab. So I think that they were probably, remunerated on pilots and proof of concepts. But so I think there's an element of that. I think what we've noticed is having a clear desire to offer one thing, one product to the client set, even though you know that your ambitions are much broader than that, allows for focus. I think we've seen a mixture of lots of teams getting involved in certain projects where that just delays the whole process. Definitely a long process. So having a sort of clear, mapped out new product process as well certainly helped some of those institutions come to market a bit quicker.
You make a great point there. I think certainly the conversations of how things have evolved like 12, 18 months ago, Ripple, custody, infrastructure, serving some of the largest kind of banks globally. And really, what the banks were looking to do initially was just to offer custody to their customers. Very vanilla.
True.
Okay, if you have a customer wants to hold their Bitcoin with the bank, we can offer that to you. And what we quickly saw is, you have the other departments come in and, we want to tokenize, money market funds, and actually we want to implement and issue our own stablecoin. And suddenly, you're right, what that actually does is it can delay the original scope, because suddenly you have so many different people that need those additional sign-offs to get done. The good news is they're thinking for the long term. So I think ultimately the industry wins. But yeah, certainly it's evolved into a much bigger operation and discussion versus just very pigeonholed into one kind of area.
Well, maybe
or just to add to that as well, like it's also often a quite exciting project compared to a lot of the others.
That's true.
And so you get a lot of people diving in, going, "Yeah, I'll be involved in that." And so and also I think these institutions are trying to appeal to younger generation and be sort of forward thinking in terms of where this market is going. And so there's an element of sort of junior people getting involved as well. So
it's probably a good mix. You get the junior side, it's also good branding, but it's also they need to move on. They need to innovate and progress. So I think there's a few factors combining. But maybe let's pigeonhole again for a second, and let's talk about my favorite topic in the world, stablecoins. Reece, from your side, if I had to give a definition of stablecoins, would you say they're a product? Are they becoming financial infrastructure themselves? How would you define stablecoins within this world?
I think the evolution of stablecoins, they're not going to stick into one lane. Is kind of what I would see. I think we're certainly seeing, not necessarily a move away, but additional use cases come out. So very, very heavily dominant on that crypto on off-ramp trading, which is primarily what a lot of the volume for stablecoins is today. Ripple have our own payment product utilizing XRP and the XRP ledger to make cross-border payments. And what we saw is our customer base were like, hey, we want to settle our transaction in USDT or USDC. And actually what became quite apparent is a large amount of our flow actually was stablecoin settlement. So we were like, okay, well, actually, let's launch our own. So we have ROUSD, which is our USD-backed stablecoin issued out of the New York NYDFS. And ultimately, what we're seeing now is we implement that into our flows, but the growth for cross-border settlement is huge. We're also seeing it used for collateral as well. So we acquired a company called Hidden Road, now Ripple Prime. And ultimately, people want to deal with a institutional-grade, highly regulated stablecoin, and that's where we're seeing a ton of that demand. Do I think it will replace the financial infrastructure? No. Is it going to be complementary? Are the financial institutions, the big banks, the big players, going to be having it as an offering for their customers? Absolutely. Because if you are sending a USD payment today from Turkey and it's going to Africa, that's going via the US and back. 2 or 3 days later, huge fees. If you can just use the stable coin to settle in, instantly, why wouldn't you use that?
Yeah, product benefits are definitely there.
Absolutely.
What I do think, sorry, Anne, do you want to go?
Just quickly, what's missing, obviously, stablecoins are great to collapse the corresponding banking loop you have, and for that, probably it's 3 or 4 corresponding banks sitting in between, and you have basically the nostro accounts with idle cash sitting there, which you don't need for stablecoins. What's missing still is the FX lag. That is still basically happening at the receiving end through a financial institution or PSP sitting there. Once we also have sort of FX liquidity in stablecoins, that would even be another sort of milestone in adoption of stablecoin.
And I think that's where the market
it will go
for
there
sure is going. I think
yeah,
Luke is like 99% USD backed at the moment, but I think we'll start to see more currencies come on there.
I think where I sort of see this all going, though, is where you're going to have the wallet infrastructure. Everyone's going to have a wallet, right? And that wallet is going to have stable coins, but it's also going to have deposit token. It's going to have tokenized money fund. It's going to have tokenized other assets as well. And they're all going to have their different use cases, and they all might be related to the type of institution you are, and some might have a higher weighting to others. But that's where you're going to start seeing a more sort of broader use case from a treasury working capital perspective from all institutions. And I think once everyone sort of starts to buy into that, I think then you're going to see much higher usage for all those reasons you mentioned.
For sure.
Maybe Jan, from your perspective with Amina EU, how are you using stablecoins today? And what are the different use cases? Is it a treasury tool? Is it a remittance tool or a payments function? Is it a salary perhaps, tool that you use to pay employees? How do you use it today, and where's the demand really coming from?
I think the biggest use case is still in trading against stablecoin pairs. I mean, most of the trading is not against fiat pairs, it's against stablecoin pairs, and I don't see that change anytime soon. Besides that, we see an increasing demand with regard to payment flows, especially cross-border payments. And that is, I think, with a lot of efficiency gain we will see in the future. And we see it more and more in tokenizing money market funds. And once, obviously, we will see a world where when the stablecoin arrives at some point, it will not be instantly off-ramped into fiat, but it will stay on-chain, not as a stablecoin maybe, but as a tokenized money market fund to get rewards on that as well.
I think the treasury use case is interesting. We acquired G-Treasury, treasury management system. Essentially, it's just looking at how Fortune 500 companies are working their balances between their global entities. $13 trillion just that they have visibility on. And actually, the adoption on the treasurers and CFOs using it for corporates, minimal. Minimal.
Why?
Could it be awareness, education? I think a lot of CFOs just do what they've always done, and I think that's ultimately can often be the hardest thing to change that. And I think what we've seen is we're implementing our USD and our payments product into this treasury management system because that provides a segue and the ability for these corporate treasurers to be able to do that. So I think that is a completely untapped kind of market. I think you're right. Trading volume is still going to have a significant portion, but I think the growth on the other side will start to move up quite quickly.
Okay, interesting.
Stocks will tokenize, that trading volume will go up as well.
Yeah.
So.
Definitely. No, definitely. And I think this is interesting because looking at it from the bank's point of view, right? And we're talking. Very grateful to have you here, but what about the underlying customers, right? It's always a question of, you've got all these different layers now around stablecoins, digital assets, trading, custody, DeFi, Who's going to end up owning the customer? Maybe, James, I can come to you on this one. Is 5 years from now, perhaps, ambitiously, perhaps, as a time frame, but who's going to end up owning the customer?
Coinbase.
I would say Kraken.
I think obviously it depends on the type of customer, but I presume you're meaning sort of on the retail side and consumer. And I think that is if I could predict that would be quite helpful, right? Because I might be able to make some money.
That's why you're here.
But I think there is I mentioned this on the last panel, but what we're seeing is convergence, right? In terms of we're seeing traditional finance brokerages offering crypto firms offering securities, and that world is combining to provide those solutions to clients so they can get their exposure through one institution, right? And so I think that's going to continue on, and so I'm sure there'll be some acquisitions and M&A around that, and then you'll end up with a more sort of concentrated outlook in terms of who is owning their customer. But that is also that you can, on your mobile, do everything you need to do via one app, right? And so I think that is something we're certainly aggressively going after, but other institutions are as well. And so I think that all comes down to some of those differentiating factors we mentioned earlier in terms of how you fit within those product needs and where you go for those targeted markets. But certainly see that those worlds converging, and maybe some of it has, some of the IPO or the equity markets this year have certainly been producing some really, really strong returns, more like crypto, right? And so they've certainly taken some of the interest maybe out of the crypto market. Definitely. In terms of where people have been putting or allocating to capital. And so I think that's just where people are going to want to be playing in terms of the service provision.
Definitely. Okay. I think we are running out of time, but maybe one final question, and I'll start with you, Reece, but this is going to need to come down to all the panelists here. We are in Turkey today, right? This is a huge opportunity. This is a massive crypto market. There's plenty of opportunity still with the regulation coming in, all the different providers, local providers, international providers such as yourselves. Why is it a strategically important market for you, Reece?
Many factors in terms of what you just mentioned. I think Ripple has always been, wanting to play in emerging markets where there is regulation. We quickly evolved our product offering just from solely payments into being an infrastructure provider. And really, the acquisition of Metaco, now Ripple Custody, has really allowed us to, look at what the likes of Tubitak are kind of building out in terms of what that framework looks like here, in terms of a custody offering, and basically allow our product to be able to fit in with that regulation. And we worked with BBVA Guarantee. Shame he wasn't on the panel today, but many partners here. So that's kind of the institutional side. We also announced today that we have partnered with BitLira, BitXN, and BitLo, who are now be able to offer RLUSD, Ripple's USD-backed stablecoin, to the Turkish market as well, because again, huge volumes here, huge adoption. So, we're certainly very bullish on this region and looking forward to continuing partnering here.
Awesome. Jan, from your perspective, what would need to happen in this market for a regulated EU institution like yourself to view Turkey as a more strategic market?
I think a lot is happening already. The regulatory framework in Turkey is shaping out. We're seeing regulation licenses being granted, etc. And we have a very high adoption of crypto. And the banking sector is much more digitized. And when I compare where I come from Germany, if I see basically the infrastructure and how digital ready that is. So that market is basically primed for adoption of institutional crypto for digital assets. So for us, it's interesting to better understand how the market works. I mean, the claim here is East meets West. We are regulated in Abu Dhabi with our banking operations and in Switzerland. So I thought it makes sense to come over.
Yeah, definitely. James, I know Coinbase has dabbled with this market and there's always been a high interest from your side. How do you see Turkey shaping up for Coinbase in the next few years?
Yeah, by far it's an exciting market that we watch very avidly, and I think we're working out how we can participate. I think we've made some allocation into India, as I mentioned before, and we've really gone deep into that market. And I think that will provide a framework within which we can sort of copy that into other markets as well. And I'm sure the strategy guys will be looking at Turkey as well as one of those components. But I think for us, institutional-wise, we can see the regulation shaping out, and I think it looks a very, very favourable market for us to try and penetrate. How we do that, we just need to work through.
No, that's why we're all here. So look, everyone, thank you for listening and thanks for your attention. Please give a big round of applause to James, Jan, and Reece for their time. I'm sure they'll be happy to answer any questions you have, and you can catch them around the stage. And yeah, thank you all for listening.
Thank you.
Thanks all. Thanks Sam.
Thanks. Guys.
Thank you all for sharing your perspective. Yes, our next discussions focuses on one of the most important foundation of institutional participation in digital assets, custody. For institutions entering this market, security, trust, compliance, and operational resilience remain critical consideration. To explore this topic, please welcome our moderator, Gökçen Müftüoğlu Çapa, founder and managing partner of Advisors Room. Joining her on stage are Nick Combs, managing director Mina at BitGo, and Burak Başara, general manager of TRBNS. Please welcome them to the stage.